So quick look here out of the gate. Let's just take a look at how everything's doing this morning. So you've got stocks a little bit lower here today. S&P 500 off about 0.5%. Same thing with the Dow Jones and the NASDAQ. Russell's also lower. Dollar still kind of trending down, and gold still kind of trending up. You know, that's been a theme this year that has been, you know, surprisingly resilient, has been the gold strength, right? On a relative basis this year, you know, stocks at one point were just completely crushed. At one point for NASDAQ, we were down like 20+% on the year or something like that. The NASDAQ and the S&P 500 have come a long way back. It's been a very, very impressive bounce back for U.S. equities. But arguably more impressive, well, actually just objectively, if we're looking at percentage returns, gold has been a monster. So gold's trading at 3,300 an ounce. It's had a nice bounce back. I mean, from these lows, that's a pretty good rally, right? You're talking about almost a 6%, well, it was a 6% rally, $190 move in the price of gold at one point. It's a pretty good bounce back considering, you know, how far we had fallen. In terms of a Fibonacci retracement from the highs, which this might be better to do on the 4-hour chart. So here is, let's just go off this high, right? This high bears, this would be a level to watch. So, okay, I'm not bearish on gold. I'm also not very bullish on gold. I'm incredibly neutral on gold, but I want to give my best perspective on, you know, the bull and bear case to consider here. So you got the 61.8% retracement coming into play here. We had a big drop, pushed through those lows, right? That was pretty bearish. But then you had this level of resistance. We talked about it a lot, that 3250 level of resistance held really well on the way down. But then we broke out, right? So bulls look strong here. But the challenge here is, like, let's look at the 4-hour chart. We haven't really decidedly broken out if we're looking at some key things. So for example, if we draw this trend line, right, it's pretty clear trend line. It doesn't matter if you draw it across the extremes of the highs or if you draw it across the bodies of this candle, right? This is the challenge of trend lines, is they can be drawn many different ways. Let's just go with this, right? The point is, what that would suggest is you have a little bit more upside potentially, but then sellers kind of have some strength here. The trickiness here is that you're sitting at the 61.8% retracement. You are in a market that has put in some lower lows, but now is sort of breaking out. So is this chart bullish or bearish? Let me ask the crowd, what do you guys think? Does gold look bullish to you, bearish to you, neutral? What do you think? And I don't have a side on this one. I'm very neutral on gold, but I'm trying to give you guys the breakdown because it is, of course, a very popular chart that a lot of the audience watches. So let's move the fibs for a second. I'll give you my 4-hour chart breakdown. So I do think that these previous highs are big, old-fashioned supply levels. I think if you rally up into that region, like let's just say we got a breakaway move, barring that we don't have some sort of major catalyst, like a war breaks out or something crazy, I would actually take these areas as opportunities to say, okay, we are definitely more likely, in my personal opinion, to top out around these areas than to break to new highs. So again, my bias here, and I'm not saying like, oh, 90% chance that if we come up here, we just drop. That's not what I'm saying either. I'm just saying like maybe 60% chance that if we were to rally up into these areas, my best guess, 60%, which is, you know, for me is good enough, 60% chance that we reject those highs. Now, at the same time, if we fall into these lows, I would say the same thing. I'd say that if you fell back into these key areas that we previously found support, I would say likely we are to also respect those lows. Does that make sense? Why? Why am I so neutral? Well, the neutrality, if you will, I'm Switzerland on gold because basically, which is ironic because Switzerland has a lot of gold, but the neutrality comes from the fundamentals and the sentiment. First, I want to show you the sentiment So this is a little bit of an interesting development that we see on gold's sentiment. So we're looking at the put to call ratio for gold. And remember that the way to read this, if you're new to my channel, I reference very frequently the put to call ratio, because it shows you straight up the market sentiment in a really constructive way by looking at the options market surrounding gold, ETF, GLD. So we have a lot of volume on this. We have a good idea of what market sentiment is by looking at the put to call ratio of the gold ETF on the options market. If that sounds convoluted, if it sounds like a lot of words, don't worry. It really is pretty simple. If people are buying calls, they're bullish. If people are buying puts, they're bearish. When this chart goes low, that suggests that there is a high demand for calls. People are very bullish when this chart gets low. When this chart gets high, the crowd is very bearish.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
So I don't see a huge upside move coming for gold at this time. Why else do I not see that happening? Well, let me show you. I'm not going to get into the weeds with it. I'll try and stay high level. But when we look at the US economic heat map, what we'll see here is that there's a very mixed story for the dollar. If I want to be really bullish on gold, I am looking for USD to get a straight up very bearish report on the economic heat map, right? It only makes sense. If you're a beginner level of fundamental analysis, you understand that if the dollar weakens, that's good for gold. And if the dollar strengthens, that's bad for gold, right? It's literally in the spot price CFD. Gold prices go up if the dollar weakens and vice versa. Okay, so what I'm trying to show you is that right now, the sentiment around the US dollar based on economic data is pretty mixed. You had some good PMI data, you had a miss in GDP. You had good retail sales data, you had soft inflation. Mixed. It's too neutral for me. I don't have enough of a story here to construct a bullish or bearish narrative on gold. Now, why am I spending all this time talking about a chart that I'm neutral on? Well, first of all, the crowd really loves this audience. A lot of people in here trade gold, and I get that. But also, I think it's important that we recognize when something is neutral, explain it to yourself as why it should be neutral, why there's no trade for me to take here in terms of a strong, I'm bullish on this or I'm bearish on this. It's okay to acknowledge sometimes charts are just not tradable. And for me right now, gold is disqualified from possible trades. I hope it comes back. I love trading gold. It will come back. It just is not ready yet. There's nothing, at the ready for me in terms of trade setups. Let's take a look at oil. Oil is another one that I am more convicted on. So if I go back to our top setups algorithm here and let's add in commodities here. So oil is getting a bullish reading. That's a +8 score. The commitment of traders data shows institutions are buying oil. We've got retail positioning, which we could pull that up on the put to call ratio if we wanted, showing what this is going to show you. This positive retail sentiment score is going to show you that people are actually betting against oil. So let's just do that reference really quick. Why oil? Why is oil getting a bullish reading? Well, what we can see here is that we're not in over extreme. And by default, oil's a +1 in sentiment. If it goes under here, it will get a -1. And if it goes up here, we'll get a +2. Why is it default? Because by default, long-term, commodities should rise. And so that's why it's at a neutral, it's not in an extreme reading, just kind of neutral sentiment. Anyways, when we go back to the top setups, right? Oil, we can also see manufacturing PMI data, services PMI data, retail sales data, employment change data. These things are positive for the price of oil. GDP knocks us a point because it's lower than expected. Inflation knocks us a point because it cooled off, which is not as positive for commodities. But the overall story is bullish enough. And so what am I looking for on oil? Well, you guys who have been watching, if you watch every day, it's like watching paint dry. I'm waiting for this chart to break out. Give me a breakout, any kind of pullback. I am a buyer of oil. And the beauty here of catching a possible breakaway move like this is that if you catch that, the upside is humongous, right? You're talking about a really big move here if we were to go from this level back to test these kind of start of the year highs. That's a 26% move in the price of oil. So I do see more upside for oil prices. I think that bottom or downside, personally, I think downside is limited, and I think upside is quite extensive. I know, of course, the Trump administration is drill, baby, drill, and all that. But the reality is that just because the president says to oil companies, hey, drill, baby, drill, does not mean they're going to uproot their entire business and just drill at, unfavorable prices, right? If oil prices fall too much, that hurts companies like ExxonMobil.
So we're at 2.6. So here's what happens. If the Fed says, look, we're changing our inflation target to 3%, well, core PC is at 2.6. Realistically, they could still have enough room to lower rates and say that they're not as restrictive. Like right now, it's funny, like this is technically a restrictive policy, but I just don't know if either the market prices this stuff in for the Fed, which is not a good thing because that's going to be really disruptive, or if the Fed is going to actually do something proactive for a change. And that's, I'm not super confident they're going to. I could see in typical Fed fashion that they don't do anything, i.e. they don't raise the inflation target. They don't cut rates until maybe September, December this year. And meanwhile, yields continue to go higher. And look, the bond market yields are going to force their hands. Like if this goes higher, I mean, the Fed is going to have to react to it. Like this is not good. This is going to choke out growth. This is going to be that potential like stagflation. This is going to be that stagflation threat that the Fed doesn't want to see, So either the market makes them do something or they should do something. I just don't know if that's going to be the case. You have like very opposing authorities right now with Trump and what he says and Powell and what he's doing. The Fed is independent. They shouldn't have to be coerced, from government. But again, it's a weird situation. And if this goes higher, it is going to put a lot of pressure and possibly choke out growth in the markets. But bigger picture, I think U.S. government's still going to spend money. They're going to raise the debt ceiling. They're going to pass, some type of tax bill. Maybe. I mean, I think if Republicans keep the majority and they vote on that majority, then we go to all-time highs and we have a global melt-up. I keep talking about this, but I just wouldn't be surprised if we have a global melt-up that, on a clean chart gets us up to like 6,400 SPX, maybe 6,500 SPX. I just don't think this is something we want to fight. I would be very disappointed if we don't have a pullback, but I'm also thinking that, this market may not give a crap and it just goes. Right? And it goes up here and it takes out highs with momentum because everyone that's been on the sidelines, look, who can tell me who's been buying these dips? Who's been buying these dips? Everyone treats retail traders like we're the dumb money, right? Retail traders, dumb money, contrarian. Look, sentiment was bad, but retail traders were the only buyers in here. And retail traders were the only buyers in here. And retail traders were the only buyers in here. Like institutions are quiet. And what have they been doing? Holding, not doing much of anything. So, I wonder if institutions, and this is a terrible entry, but if institutions are going to wait and see like, what? There's so much momentum behind this that the coast is clear. And they jump in and they were sitting, at gains for the year. They weathered the storm and they start to participate at pretty high levels. So, and even if we hit these highs and we pull back, look, this is still a head and shoulders pattern in my opinion. I still think that gets measured out. Right? So I just think that the melt up, and it's not just the US, it's the world. Okay. China spending money. Eurozone spending money. US is likely going to spend money. This was the threat. US is going to cut government spending. US is not going to spend anything. Fiscal policy is going to be cut to nothing. It's only going to be monetary policy. We're waiting for the Fed. That changed. Now the government's spending. China spending, Eurozone spending. We have money supply. We have liquidity. We have increased across the board. This to me is where I think we get a global melt up. Global melt up could be a lot of fun. It could be a participation where you're like, holy crap, I can't believe how high this thing went. However, I think when and if that it's overcooked and over its skis, I think that is going to be another 20, 30, maybe worse correction. Because at that point, you're talking about how high the deficit is. What's our debt to GDP? How bad is it now from a global debt perspective? And that might be the big turning point, you know. But we could be at 6,500. We could be at 7,000. Nobody knows. So anyway, I'm just saying, right now, any dip we get, I'd like to buy it. I don't know if we're going to get a dip. That's what's so frustrating is like, I don't know if we're going to get a dip. I hope we do. Okay. But as always, if it was that easy, everyone would do it. But it was interesting, like the market was dealing with legitimate systemic risk and it pivoted hard. And now it's like nothing's going wrong. So I don't like how the sentiment has shifted from extreme fear to now like getting into, we're almost tapping into extreme greed. And so somewhere in between would be nice. I mean, realistically, it's like, let's not break the highs. Let's not break the lows. Let's actually have a year where the next leg higher would be actually proven and confirmed and justified. Because one thing that's been exhausting since 2018 has been asset bubble, burst, asset bubble, burst, asset bubble, burst, right? 2018 was a volatility event. Melt up into 2019, 2020, COVID. That was a pop. Melt up into 2022. That was a pop. Melt up into 2024. We had a flinch in August of 2024. Roll into 2025. We had a pretty nasty correction. It's like we're getting lots and lots of 10, 20% sell-offs. So anyway, we'll see. But if we get pullbacks and buying dips, don't be surprised if we melt up to highs. Okay. If we get to highs, I see this playing out a couple of ways. One is it's a head and shoulders and we do pull back and that makes our right shoulder. Or two is it's a range trade and we come all the way back down to the lows again and we just deal with the range. And all this growth is not justified. We're at these highs and the market's going to return not what it should, right? When we're at like 25 times earnings on the S&P, that's historically high. And we're at 25 times earnings, mostly led by large market cap companies like Mag 7. So again, it's the same cycle. You get overbought, you get overextended, you get too concentrated. Market's got to find a way to ventilate it. But again, I would probably put the probability more so of a bubble to the upside versus another big crash to the downside. I just think the landscape has changed. So unless there's a big flip in like trade war sentiment again, and it turns negative, I think this market is going to figure out how to just keep grinding higher. So all right, there's my rant for the day. Currencies pretty much the same. I'd like a pullback on Aussie CAD. I'm still looking for a swing trade. Swiss pairs. I'm not buying dips yet. I'm still profitable. I'm still waiting. This is my level that I want to take it back to for target 1. If we get to here and then a pullback, I'm taking a swing trade for a symmetry wave 3. Aussie yen, no trade. Aussie New Zealand. I'm hoping I can get a dollar cost average in at 106, 103, 101. Aussie dollar, not trading this, but if you like, this is my RFK voice. If you like Aussie dollar, small, even small, stop loss below. That's not a bad trade. It's open space. If we have risk appetite, Aussie is a direct beneficiary of risk appetite. Doesn't mean the dollar has to go lower. If you're going to see dollar go lower, you're going to see the euro dollar go higher. Like that's the correlation because it's the DXY is heavily weighted in the euro. The Aussie is a slim piece of that. But with risk appetite, the Aussie does really well. With risk appetite, the New Zealand does really well. There's open space right here. I think that's a good trade, but you got to trade it small, right? Because if this turns for a pullback, then yeah, I want to buy some here, and make sure we don't invalidate those lows. That to me is a really good swing trade. CAD Swiss, I'll wait. This is going to be my level. So a lot of support back here, 200 moving average. That could be a profit level 1 for me. That gets me into profit, and then a swing to some type of symmetry. But this was a little bit uglier for right now. I'm just going to see if it just works its way, works its way up. That would be a nice pattern trade, wave 3, something like that. That would still require gold correction, I think. Swiss yen, no. Euro Aussie, nothing. Euro CAD, I said if you like to sell trades, it's messy, but I like to sell trade in Euro CAD as long as you don't take out the highs. Euro Swiss, it's okay. I'm still holding Euro Swiss long. Euro Pound, no trade. Euro Yen, no trade. Euro New Zealand, no trade. Euro Dollar, I'm long and holding long. If we get to 15.50, I'm taking profit. Pound Aussie, no trade. Pound CAD, no trade. Well, Pound CAD maybe. Small trade here, and then a small trade at the high. Stop loss like 1 ATR higher. I think you could turn this into a pretty good reward to risk. Not a bad trade. It's a little volatile, but just trade it small. Could be okay. Pound Swiss doing his thing. Hopefully we head up to 12.50 and 13.50. Pound Yen, scalper's paradise if you like it. Pound New Zealand, no trade. Pound Dollar, new highs on the Pound Dollar. Interesting. I'm not trading it. I think this is a bull trap. Maybe it pulls back first. If it goes higher, then I'm gonna miss out on the Pound Dollar because I'm not in it. But if we go higher in the Pound Dollar, I would imagine that my Euro Dollar is also going higher. So I'll take a winner there. New Zealand CAD, same thing as Aussie CAD. Pull back into this zone looks pretty good for a swing trade. New Zealand Swiss being patient, but hopefully we're going to head back up into this area. So this is one. Maybe this is all one big wave. I hope this is one big wave, because if this is one big wave, pull back for a higher low and then symmetry swing to get me out for some profit. New Zealand Yen, no trade. New Zealand Dollar, similar to Aussie Dollar. Do you like this one enough? Right? I mean, Aussie Dollar looks a little bit cleaner, but if you like this one, it is open space to the upside. You got to be prepared for, another buy in here and a stop area below the lows. But open space, risk appetite, New Zealand Dollar does well. Risk appetite, Aussie Dollar does well. There is about 500 pips there. About 500 pips. It's not nothing. Not nothing. Dollar CAD. Glad I didn't force a trade here. I'm out. I got no trade in this one. If we come back down to like 33 or 3200, possibly a buy opportunity again on dollar CAD. What would be nice is if we drop hard on dollar CAD and we leave some pockets and inefficiencies, then sure, I'll look at oversold conditions. I'll start to take it back up. This is a really good halfway point in a range trade. Dollar Swiss, just gonna stay patient on this one for now. Dollar Yen, as we mentioned, if it breaks the 140 floor, you could be in for a 2,000 pip sell-off, which is just a pattern trade. That's all it is, just a pattern trade. But could be a lot of fun. That could be like months. That could be months. That could be months of direction. But if you align it, trade it on like a 1 hour, 15 minute, 4 hour, just keep the structure. You can trade that precise with precision on the lower time frames.
So here I am today. I do believe that what is currently happening in the market, I haven't seen what Nick said, but what I believe is currently happening is that the Moody's situation is taking a bit over. It is sending dollar lower and sending everything else higher, and in particularly yen has been given a bid. So in that sense, should I be buying dollar? Should I be buying yen pair? Sorry. It's all a relative strength type situation, right? I do believe in risk on. I do believe in my seasonality. I do not like what is currently happening to the market in terms of, okay, we have the shift from America, as you can see here, going into yen mostly, and to euro after that. But I'm cautious. What do I mean by cautious? I haven't lost my entire portfolio or my entire life as of today. It's a bit rough. We are in a standstill, but if this one now turns lower, as 24/7 Betterment says it should, all respect to you, bruv. But I need to see the proof. Long dollar yen and pound yen. Okay. Slim pickings on the chart. Yeah, it hasn't been great, and it isn't great. I just thought, I hope it would be better. So we can do dollar yen. I like that. And I would argue that my theory about buying dollar yen absolutely went to the graves. And to be honest with you, it's more than anything else, I would argue, the best sell trade this week. We had a gap lower, which to me and in my world would generally turn higher, as you can see over here for that matter, or other weeks I probably can find if I just remembered. Like this one, for example, here there's a big gap as well, and then it turned higher, at least for the short term. So, okay, that's a bit of an odd thing to happen, but I can agree to that being a part of the different things that's currently happening. So, I would argue, until you have a break higher, until this, and because I don't know how much influence this Moody's downgrade of our safety net is going down from prime, and it seems to have some kind of impact and some kind of, I just don't know if we have seen the full force of it yet. So it's a bit of a slow burning process, as it seems. So I just need to watch it. And how do I watch it? I watch it by, okay, no more buys. And if you have sells on, you're all right. But looking for buys on this one isn't necessarily a horrible idea and process, but I would argue that it's not today. It's not a trade that I would say, oh, great. But this is kind of what you're waiting for. And I would argue that, not financial advice intended whatsoever, but I am more in here. And if we start counting how long time into the future that might be, that's about 2 days. So cheers and chill. 24/7 Betterment says sell every pop up. Okay. If you do sell, buy every pop downs. We'll see who wins in the end. So, cautious on this one. Pound yen had a bit of a new low today. I would even argue, if this doesn't work out, and it hasn't so far, I would even argue that 190 to 150 is another great place to look for a reversal. If this one doesn't make it today, it doesn't make it higher. This isn't dead. This is less fortunate as a buyer, if that makes sense to you. Rather than we haven't seen the need to push higher. Okay, all right, okay, I'll take it. It's still in the number one phase. We're still early. What do I mean by early? Because I said reversal on the dollar yen. I needed that and that. Sorry, that's a bit worse than I thought, but we haven't gone to number 2 pullback yet. Second pullback. That's where I want to buy. So that's number 1. That's number 2, right? We haven't got that yet. So until then, 24/7 Betterment might be right, and I'll be licking my wounds. What do you think about British pound, US dollar? I would say bullish, but that goes against my dollar bullish theory. but it's definitely in the world of, okay, what if dollar falls? This one should be bullish. What about this week's targets? We have already hit, I guess, and I bet weekly target for buyers. What does that mean? It means that we can go higher, we can also go lower, but the move that was created and thought about on Monday is over. We're about Wednesday now, so I would argue that we should probably come down to a good level of 133.50 and then going higher if you're thinking, yeah, dollar bearish is a good thing to do. But I'm not in that camp, so that this is the most likely outlook at the moment. It's against what I believe should happen to the dollar, and until I see a full reversal, I can't touch it, bruv. TJ can't get through the 200 EMA on the daily. Yeah, no, I am 100% agreeing with you guys saying that pound yen is definitely struggling. Pound dollar is doing much better, is almost trying to make a new high. But in the same space, we are on pound, and pound to me has become a bit more mysterious than I would like it to be, because they are currently cutting. Bank of England is currently cutting. We are seeing a bit of an improvement in their fundamentals, for that matter, and we're seeing range or even bullish tendencies in a cut. So I would argue if I add dollar to this one, and dollar is on the opposite side, so I need to have a new price scale, and I will invert it. Invert scale. This is more than anything else a dollar move. I think that's pretty obvious right now. So am I? Well, slightly then, I guess. But more than anything else, I would argue this is a dollar move. So I wouldn't be surprised that it would just follow whatever opposite of dollar, whatever dollar does.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.